Welcome to the Property Elite podcast. I'll be your host, Jen Lehman, Chartered Surveyor and co-founder of Property Elite. Stay tuned each week for more on industry hot topics, market updates and new RICS guidance.
In this week's blog, we look at the new corporate criminal offence, the failure to prevent fraud, established by the Economic Crime and Corporate Transparency Act 2023 and is effective from the 1st of September 2025. This is essential knowledge for all RICS APC and Associate RICS candidates, as well as qualified Chartered Surveyors. Who can commit a failure to prevent fraud? The offence relates to large organisations or companies, also known as a relevant body. See the section 199 of the Act. These are organisations who meet two of the following three requirements. They have more than 250 employees, they turn over more than 36 million, or the balance sheet total is more than 18 million. This also includes large non-for-profit organisations, incorporated charities and incorporated public bodies. It does not, however, apply to police forces or government departments. What is the failure to prevent fraud? A relevant body commits the offence of a failure to prevent fraud if a specified fraud offence is committed by an employee, agent or other associated person for the organisation's benefit. The organisation did not have reasonable fraud prevention procedures in place. Liability is strict, so there is no need to prove that senior management within the firm knew about or ordered that the fraud took place. If an organisation has reasonable fraud prevention measures in place, then this is the only defence against the offence in court. The 6 principles underlining what reasonable measures entail are top-level commitment, risk assessment, proportionate procedures, due diligence, communication and training, and monitoring and review. How does this sit alongside existing legislation? An organisation can now be prosecuted for failing to prevent fraud, alongside the individual who committed the fraud being prosecuted individually. The new legislation thus sits alongside existing legislation relating to fraud. The aim of the new legislation is, therefore, to make organisations responsible for fraud offences committed by employees, with the intention of benefiting the organisation and to improve corporate culture and fraud prevention measures. What fraud offences are covered by the Act? The government website confirms the following fraud offences apply under the Act. Fraud offences under Section 1 of the Fraud Act 2006, including fraud by false representation, fraud by failing to disclose information, fraud by abuse of position, participation in fraudulent business, obtaining services dishonestly, cheating the public revenue, false accounting, false statements by company directors, and fraudulent trading. Where can I find out more? We recommend reading the full summary of the legislation on the government website, as well as keeping an eye on the RICS website for future updates. You should also head to our blog for a summary of the existing RICS guidance on fraud.
Thanks for listening to the Property Elite podcast this week. Head to our website to check out our full blog, free and paid support resources and services, free consultation for every single RICS APC and AssocRICS candidate, and also ask us any questions you have via the website chat blog. See you next week.